Welcome back. It's time for your daily deep dive into the news.
Ready to uncover what's really moving the markets today.
Absolutely. Let's kick things off with the inflation picture. The Personal Consumption Expenditures Price Index, that PCE, the Fed's favorite inflation gauge.
Right. It gives a pretty clear snapshot of what's happening with prices.
Well, the latest data shows that inflation accelerated in December,
So 2024 ended well above the Fed's 2% target.
which kind of throws a wrench in things, doesn't it?
Definitely. A lot of folks were anticipating interest rate cuts soon, but this PCE data complicates that,
Seems likely those rate cuts are on hold for now.
especially with the whole tariff situation adding to the uncertainty.
You're right, the market's definitely reacting to that.
Yeah.
Could you break down those potential tariffs for our listeners?
Sure. So basically, tariffs are taxes on imported goods.
Like a way to protect domestic industries, right?
Exactly. And maybe renegotiate some trade deals. President Trump is proposing a 25% tariff on goods from Mexico and Canada.
Whoa, 25%. That's a big jump.
It is, and there's talk of a 10% tariff on Chinese goods, too.
So how would those tariffs impact different industries? Are some more vulnerable than others?
Well, the auto industry is particularly susceptible. They rely heavily on integrated supply chains across North America.
So those tariffs would really disrupt things.
Absolutely. They could disrupt production, drive up costs, and ultimately lead to higher prices for consumers.
Okay, let's switch gears now and dive into the flood of earnings reports we saw today. It's a real mixed bag. Some companies are exceeding expectations while others are facing setbacks.
Yeah, it's earnings season in full swing.
Let's start with Apple. They beat revenue and profit projections. But iPhone sales saw a dip this quarter.
That dip in iPhone sales is interesting. Some analysts are pointing to increased competition or market saturation or maybe even shifting consumer preferences.
It definitely raises questions about Apple's future strategies. How do they stay on top in the ever-evolving smartphone market?
Right, exactly. It'll be fascinating to see what they do next.
Now let's look at Intel. They missed their forecast expectations, but surprisingly their stock price is actually climbing.
Yeah, that's a bit of a head-scratcher, isn't it?
How do you explain that?
Well, it seems investors might be getting used to Intel's recent performance.
Like they're almost numb to it.
Yeah, maybe. They could be overlooking underlying issues and betting on a turnaround down the road.
That's an interesting take. Moving on to the energy sector. Chevron missed earnings estimates, and they reported their first refining loss in 4 years. But they're touting record production and announcing a dividend increase.
That dividend increase is a strategic move, for sure.
It's like they're trying to reassure investors even with that earnings miss.
Exactly. They want to project confidence in their future prospects. But the question is that dividend increase sustainable in the long term, considering that refining loss?
Good point. Now, ExxonMobil, they actually beat fourth quarter estimates, driven by higher output from the Permian Basin and Guyana.
Those are key production regions. And ExxonMobil's performance really reflects the current global energy landscape. What's driving oil and gas production?
It'll be interesting to see how their progress unfolds as energy demands evolve. Let's talk about Colgate-Palmolive now. Their stock actually declined despite beating profit expectations and hitting a significant revenue milestone.
Yeah, sometimes the market reacts in unexpected ways. It might be that investors are still a bit skeptical about Colgate-Palmolive's ability to maintain this positive momentum.
Like they need more proof that the turnaround is real.
Right, exactly. They're probably waiting for more concrete evidence before they fully buy into the company's trajectory.
Okay, makes sense. Now, Southwest Airlines, they're anticipating strong travel demand this year, but they're also warning about those persistent inflationary pressures.
And they're facing potential scrutiny from the SEC regarding some adjustments they made to their revenue figures in the earnings report.
That SEC investigation is definitely something to watch.
Yeah, if the SEC finds that Southwest improperly modified their revenue figures, it could have serious repercussions for the company.
It raises questions about transparency and accountability in corporate financial reporting in general.
Absolutely. It'll be interesting to see how this plays out.
And we can't forget Walgreens. Their shares took a nosedive, dropped 15%.
Oof, that's rough.
Yeah. It comes after the company announced they're suspending their quarterly dividend, part of their restructuring efforts.
Suspending a dividend. That's a major decision. Usually means a company is facing some serious challenges.
It'll be crucial to see how Walgreens handles this restructuring and what it means for their long-term prospects.
Agreed. Okay, so let's circle back to President Trump's tariff situation for a minute.
Right. Let's dig deeper into the potential impact on the markets.
Well, when you look at the big picture, tariffs are essentially taxes on imported goods. which makes those goods more expensive for consumers and businesses.
And that could fuel inflation, right?
Exactly. It could also hinder economic growth. It's a complex issue with a ripple effect across the whole economy.
Our sources indicate oil might be exempt from these tariffs, but the auto industry is bracing for a major hit.
Right, because the auto industry relies so heavily on these intricate global supply chains.
So tariffs on Mexican and Canadian imports would throw a wrench in the whole system.
Yeah, they could disrupt production, inflate costs, and eventually lead to higher prices for consumers, which in turn could stifle demand for vehicles and impact the profitability of automakers.
So what does all this mean for the average investor? Should we be worried about these tariffs?
It's definitely a development worth keeping an eye on. Tariffs can introduce volatility and uncertainty into the market.
But they could also create opportunities, right?
Exactly. For instance, some domestic companies might benefit from reduced competition if those imported goods become more expensive.
So it's not necessarily all doom and gloom. There could be some upsides for certain sectors.
Right. The market's always in flux. New challenges pop up, but so do new opportunities. It's all about adapting and making smart investment decisions.
We've covered a lot of ground today, from inflation and earnings reports to the potential impact of these tariffs. Anything else jumping out at you from today's news?
Well, amidst all the market turbulence, there were some positive developments. The FDA just approved a new non-opioid painkiller developed by Vertex Pharmaceuticals.
That's huge. It could revolutionize pain management, offer a much safer alternative to opioids.
Absolutely, and address a critical public health concern. It's a big step in the fight against the opioid crisis.
And switching gears completely, Atlassian, the software company, they've reached a new 52-week high.
They're riding the wave of cloud and data center growth, and the demand for AI solutions is fueling their success.
They're a prime example of a company that's really capitalizing on those emerging trends. And for all the sports fans out there, Denver has secured a new NWSL franchise.
With a record-breaking expansion fee of $110 million.
That's incredible. It shows the growing power and appeal of women's professional soccer.
For sure. We're seeing more and more investment and interest in women's sports. It's a trend worth noting.
Speaking of investments, it's interesting to see how even the ultra-wealthy are recognizing the potential of AI in healthcare.
Yeah. Billionaire family offices, from Bernard Arnault to Laurene Powell Jobs, they're pouring money into these sectors.
They're clearly betting on future growth and opportunity in those areas.
And their decisions often provide valuable insights into emerging trends and promising areas for investment. They tend to know what they're doing.
Usually do. Before we wrap up, let's touch on Commerzbank, the German bank.
They just announced a 20% profit hike, and they've launched a share buyback program.
That's a bold move, especially with the potential takeover bid from UniCredit looming.
It's a show of strength. It demonstrates confidence in their ability to operate independently and deliver value to shareholders.
So all in all, it's been quite a day in the world of finance and economics.
No kidding. From inflation concerns and mixed earnings reports to potential trade wars and promising advancements, the market landscape is never boring.
It definitely emphasizes the importance of staying informed and making sense of all the news coming at us, and then adapting our investment strategies accordingly.
Couldn't agree more.
Well, so much for a quiet day on the markets.
It really highlights how everything's connected globally and how quickly things can shift.
What stands out to you as the biggest takeaway from today?
I'd say it's the convergence of these major trends, the persistent inflation, the mixed bag of corporate performance, and then the looming possibility of these trade disputes. It creates a pretty unpredictable environment for investors.
Especially with those policy decisions, like whether or not to implement tariffs.
Exactly. Those decisions can have huge ripple effects across industries and sectors.
So for our listeners, what should they be paying closest attention to in the coming weeks?
Keep a close eye on how that tariff situation unfolds. Will they actually be implemented? And if so, what's the real impact going to be on businesses and consumers?
And of course, keep analyzing those earnings reports.
They're goal D when it comes to understanding which companies are navigating all this turbulence effectively and which ones are struggling to adapt.
As we wrap up our deep dive today, what's the key message you want to leave our listeners with?
Knowledge is power, especially when it comes to finance and economics. Stay informed. Break down all the information coming at you and extract those key insights. That's how you make smart decisions.
Well said. That concludes our daily news deep dive. We've sifted through a mountain of information today, pinpointed the most critical takeaways, and hopefully given our listeners a better understanding of what's shaping the market. Until next time, stay curious and stay informed.